Good evening, everyone. Welcome to the Hurley Investments Market View Commentary, June commentary on the 3rd. Great to have you guys with me here today. I have a ton of hopefully what I feel is pertinent or relevant information to you to understand what we're looking at and why. First of all here, and I find this a little bit interesting, but you guys can let me know. Okay, a couple of you asked when you would be fully invested. And this comes because of the sale of Meta shares. So a couple of you asked, hey, when am I going to be fully invested? And some of you referenced my email. And all of you should have received this email. For some reason you didn't. You need to talk to me, send me an email, send me a text. But I sent an email on the 23rd, just before Memorial Day. And it went through some of the concerns that I had in regards to what we're looking at in the market. So out of curiosity, someone tell me what would be a great buy right now. If you could get into the market in some position, what would be a great purchase for getting in the market right now? So I found a couple very interesting comments here. The first one was NVIDIA and CMG. So right now, if you got in NVIDIA, you'd be getting in at a high that looks to be a short-term resistance right now. My biggest concern with NVIDIA has nothing to do with the 10-for-1 split, but we're talking of a PE ratio of 67.27, a forward PE that's half of that. And yes, I understand their sales were out of the world. I mean, ridiculous. 200% year over year. But fundamentally, we have a problem, Houston. It is so overvalued in so many metrics that it seems like a better investment would be after a 10-for-1 split and seeing it somewhat move itself or fix itself out of there. So I would have a hard time saying going into NVIDIA would be a great fit right now. Chipotle, a $3,000 stock, but it did get up to 3,200. Stuart, you think this is a great buy for right now? Their PE, their forward PE looks exactly the same. Ridiculously overpriced. And their metrics are so far above the sector that it's scary. So we're thinking after the split there. Those might be good. Some that have sold off a lot but have a good future like software stocks. Mod, that might be a good look. I actually haven't done that. Haven't taken a quick peek, but I did find it interesting because I would say undervalued stocks, right? I do like the S&P 500. And if you look at a couple of those undervalued stocks, you have Disney, you have Boeing, you have Under Armour, you have Square, you have Ford, you had Under Armour or Micron, but it's more fully valued right now. I do. A lot of those were already in. Now, a couple comments just to be unique. And Jackie, I saw your comment there. I'll get to that one in just a minute. A couple things that I think are rather interesting. Is it worthwhile to be in a position and plan on waiting for 2 years or more for it to move? Is there anyone that's thinking, hey, let's stick our money into something willing to wait a couple years for it to move? It's an interesting conversation, right? Here we are trying to predict the future. There's no right answer to that one. Here's the second thought. Do you want us to just put money into something so you are fully invested? Thoughts on that question? How many of you just wanted to put? That's funny. Hell no. No, that is nonsense. You better not. Again, I found all three of those answers really interesting. And it's funny because some of you, and there's no problem asking this question. I like that you guys are asking this question. Hey, Kevin, what are you doing with my money? Someone asked me, she asked me at the beginning of the year, well, is it better to take this 51,000 and change and go stick it in a bank CD, where at the time you'd get somewhere between, 3.5%. And I said, no, I mean, we're looking at things, we're always looking at things, but we're not going to just throw people's money into something hoping that it moves. None of you have me managing money hoping that I'm going to get lucky. No one's paying me here for luck, right? You're paying for expertise, for protection, for work, for working those fundamentals. So I hope that you're pleasantly pleased looking at your account today, where 51 can get up to 60 and make roughly, 3.5 to 4 years what a CD would make. Apple, someone asked about Apple. And Apple is fully valued somewhere between $196 to $203. And Apple just hasn't moved. Apple hasn't moved because it's one of the weaker Mag 7. Boy, it's just getting up to that 196, seeming to get a little knocked off its growth. Well, Kevin, it's moved pretty much or pretty fast from 180 up to 94. That is true. Bounced off the 200-day. Have billions of dollars to buy their shares back. But what you're seeing right now is probably the WDCC Las Vegas move. If anything, they probably move back down from here. I would love to see them get above 200, but their numbers aren't giving that type of growth. We would love to get out around, I don't know, 196, 199. Maybe we're going to try to sell some short calls here. But Keith and I have been watching it move for the last 3 weeks and just trying to figure out, okay, where is Apple going to go and where is its growth catalyst? Its growth catalyst just isn't coming up to a position that we're looking at and going, you know what? It's going to have a breakout. They need something to invest in that's their next big product, their next big thing. And they haven't had that for a while. They have had some good moves in the past off of their stock buyback, but it's just not coming up here in the future. And so just a comment I want to make. Please give us some patience so that we can find a great opportunity instead of just making the account fully vested. And I know there are a couple of you from the beginning of the year who hopefully are quite happy with how your accounts went from the beginning of the year to today. Those are normally with those that had somewhere in the range of 50, 55, up to 75. We've made some good purchases into Micron and MRO for you. So with that said, let's talk about MRO and oil. Oil got hit big, which is roughly just the way to say a loss of 10% roughly in the last week, which is really just the last 4 days. Anyone know why? Someone tell me, why has oil gotten hit big and been dropping 3-4% last Friday? Today it was down somewhat big, but then came back. Anyone know where we're having a problem with oil and what's going on here? What do you think? Give me an idea. What's happening with oil that you guys are like, for crying out loud, what's going on? Yeah, so Guyana, I don't know about that one, but the short answer is too much supply from the U.S. depleting our reserves. And so the short answer is, and I'm going to say the Democrats, but we've seen it on both sides, the Democrats are buying boats. We already have ridiculously low reserves that they're depleting even more. Instead of buying from our country, our own companies here in the United States, instead of having them refill our reserves, we are flooding the market with our reserves up to another 1 million barrels a day to make prices low for the next 90 days through summer. The current administration is trying to please the American public. I love it. I like low gas prices. Normally gas prices go up. I have a diesel truck. I was expecting to pay somewhere between $4.50 to $4.65. Right now, I'm paying somewhere between $4.45 to $4.55. Excuse me, $3.45 to $3.55. I'm about $1 cheaper than where I should be. Is this a calculated risk? Because someone just typed in, and if we have a war, we need fuel, we're totally screwed. Agreed. But we're not at war right now. Have we dipped ridiculously low into our reserves? Yes, we have. It is somewhat ridiculous. Can we use our own manufacturing here to start to replenish those? Yes, we could. If we would have an administration that would be more corporate friendly, where we could drill, baby, drill, right? Produce. But right now, we have created too much supply, not worldwide, just within our own country, by still accepting OPEC oil from Saudi Arabia, by producing our own oil, and bringing another 1,000,000 barrels a day online from our strategic reserves. Oil will probably not have a good quarter. We won't have a good quarter because, how do you say this one? Because the U.S. is manipulating the oil prices within our own country. We're buying votes in an economy that doesn't feel really good. So the Democrats, and I think it's brilliant. I mean, I'll be honest with you. I like the lower gas. I'm not going to lie to you. I'm not going to pretend that I'm so Republican that, oh, how dare they lower my oil prices. It's just a calculated risk for an election, and it's not necessarily the smartest thing to do for the country as a whole. But let's take advantage of some cheaper gas prices as we know it. MRO. MRO is being purchased by ConocoPhillips. And I have a very interesting article. By the way, there's my lower gas prices, right? But MRO, have the article here. ConocoPhillips is going to buy MRO. And it's an all-stock transaction. So we are going to get 0.255 shares of ConocoPhillips. And it was based on the price, closing price of May 30th or something like that, 30th, 31st. Working those numbers, closing price of MRO was at $26.50. And the expectation was that 0.2550 shares meant a 14.7% upside. If you just take the $26.50, multiply it by itself plus the 1.47 or the 14.7% upside times 26.5, we come up with a expectation of our shares of MRO topping out somewhere around 30.3955. So basically $30.40. When we see MRO getting up to around $30, we will expect this to happen in the next 30 days. When we see it right around $30, our expectation is we're going to sell out of MRO. We'll take our profits. We'll be happy with it. To get 25 shares or 25 shares for every 100 shares of MRO. Let me say that again. To get 25.5 shares of ConocoPhillips for every 100 shares of MRO, we just don't see it as we work their numbers, and ConocoPhillips has done nothing but go down. We just don't see the opportunity in ConocoPhillips. They are debt-ridden right now. These shares that we're getting, it's not that they're taking treasury shares. That is not what's happening here. There are no treasury shares in this all-stock deal, this all-stock transaction. They are literally creating a secondary set of shares. They're devaluing the shares in this purchase. They are creating shares out of thin air. The dilution of current shareholders is not good. If this was treasury stock, it would be a whole nother ballgame. But the dilution through a secondary offering of the purchase of a company with already being debt ridden, ConocoPhillips is not where you should be putting your money. Exxon, Chevron, Valero, Murphy Oil, all much better opportunities than ConocoPhillips. So that's what's happening here with MRO. Okay, Baidu. I like the picture because people are like, Kevin, you are killing me with Baidu. And I'm killing myself. I understand it. But we did a great job of protecting it from 120 down to 110, went up to 114. We then went from 110 down to where we're at right now. We're doing an excellent job on Baidu. Why do you have us still in Baidu? $97. Target price of 151, which gives us roughly $54 to the upside. They say 183. I come up with closer to 180, but I'm seeing about $83. They 183, 181, $83 to $86 to the upside. Even the low estimate is 20% higher than where it's currently at. I hate the political games that happen. The tit for tat. The hey, I'm going to tariff you if you tariff me. Again, for those of you, Trump started this problem, killed it. Unfortunately, even Kathy Woods couldn't manipulate the Chinese stocks enough to keep them up. The opportunity is there. Am I looking at India being the next upcoming China? Is India taking all the right steps to move like China did through the 90s and 2000s? Yes. But right now, your best, second largest economy in the world, and the opportunity to have some opportunity there is in Baidu. Someone just made the comment, I think it's way too late for the India trade. I'm going to bring an article that I read to you guys next week, and I'm doing my research. Infrastructure for India is primed exactly the way that China was. The question is, will they be able to be, will they not manipulate their currency the same way, and will they have leadership that is mostly unbiased and unbribed? Let's just call it that way. And no, I don't consider the United States to be on our high horse. As you look at some things that have happened here recently, I'm shocked. I'm really shocked at everything that's happening within the current administration and what Biden has done. I'm shocked at how the manipulation of a court case has also happened. Anyone keeping tabs on the Trump New York court case? Anyone have any comments on that one? The short answer is this. The U.S. looks like a dishonest kangaroo. kangaroo courts right now. And it's not just Banana Republic. 3 people just typed in Banana Republic. It's not just the Trump case. It's the current administration lack of backing of the U.S. Supreme Court. You cannot have the type of attacks that have been on the Supreme Court as of right now by the Department of Justice and the current administration in the White House. That we have a problem. We have a big problem with what's happening there right now. So that's just something else to keep in the mind when we're looking at our stock market. And again, I am definitely worried about the election and how there's going to be no winners to a certain degree. Last thing to bring out to you, and I thought I had this so that I don't know. I thought I had this on my docket that no one would understand, but someone understood. Has anyone looked at the past 2 weeks of the sale of U.S. Treasuries? Has anyone been paying attention to the sale of the U.S. Treasuries? I heard it Monday, the Monday pre-Memorial Day. I heard it Monday the 20th is when it came to my attention. And I think I heard it through Bloomberg. Does anyone heard what's going on with the U.S. Treasuries right now? Bloomberg, May 20th, was the first one to make notice of it. Bad sales. That's one of the words, but under fulfillment. Buyers are diminishing. I'm just going to call it an under fulfillment. I saw it 2 weeks ago. I would have thought, it's a one-off. The next week under fulfillment, it's the holiday week. Houston, we have a big problem in the U.S. Yields are still going up. It does not have a lot to do with the Fed. But here are the most recent auctions. And these were all 6.4s. And then if we go down to the auctions for the 2-year, the 3-year, most of these are on the 31st. I'm just going to bring these up to you. And let's see if I can't convert it to make it a little bit bigger, because you guys are like, Kevin, I don't have my glasses on. 2-year note, May 31st. Here's all that's mattered. Tendered, 166 billion. 69 billion accepted and went moving forward. We missed funding our 2-year auction by $100 billion for the second week in a row on May 31st. 3-year note. Wanted the interest rate at 4.5%, 4.6. We paid an extra tenth. Tendered, 152. 58. All that came to us on the 3-year note. 5-year note. Tendered 160. Received 70. These happen about every 2 weeks. On 3 of the notes, we're missing by $100 billion roughly on every note. Well, Kevin, this one was only 90. I get it. They don't look better. 7-year note, 106 tendered, 44 accepted. We're blowing it. How about the 10-year? 10-year's got to look better, right? 104 tendered, 42 accepted. Interest rate, we were trying to get 4 3/8, came closer to 4.5. We are not funding our debt. 20-year, tendered 40, got 16, less than half. 30-year, this is what the banks are buying, the bigger ones, right? 20, 30 years, tendered 60, got 25, less than half. Why am I bringing this up? We will have to raise rates to fund our own debt, which means prices are still going to go higher. It's not necessarily an inflation. We don't have inflation problems. We have country management problems. If you thought we were going to get an interest rate cut this year, right now, I'm now showing you with real numbers that the United States cannot afford an interest rate cut this year. If you wondered why precious metals are going up, this was the reason for the run on precious metals. I do find it somewhat interesting because it's not like we can go back to the gold standard. It's not like we can go and just live off of bartering silver, gold, copper. That'll never happen again. We're past that time. And if it's something catastrophic happens to the dollar, it's not like you're going to be able to go and trade gold and live off of it or trade gold for food. Those days are long since past. We cannot fund our own debt right now. We don't have the capability to even pay the interest. This means rates and inflation and pricing is going to go higher. I don't know how high, but I can finally find something numerical that explains why we probably will not see a rate cut this year. I've taken up 43 minutes today already. I'll fill in the rest for you. What questions do you guys have that I can answer for you? I know I've talked on a lot of stuff. Boy, 2 weeks ago, and I find all kinds of stuff in the market that give me heartburn. But what questions can I answer for you guys? Yes, so that's a great question. I said we would be ready to protect, and we are. But what some wild days we've had. End of May, little spike at the end. Hey, we went through, came to our East Coast lunch hour fine. May 31st, that it dropped off, or May 30th. May 31st, there we go. We had the end of the sale. June 1st, new money comes in. But at 10:30, East Coast lunch hour, market drops off and it recovers. It's been an interesting couple of days. What does this mean? There is money coming back into the markets. There's money coming back into the markets. We are ready to protect. But yes, other than Baidu, I'm not sure we have protection on anything else. So yes, we are ready to protect. Under Armour $9 puts are off. Disney's puts came off when Disney was down at $101. Baidu, we still have protection on at 110. So we took profits. On Under Armour and Disney puts. Still have Baidu on. I think we got that one until the 14th, till next week. It might be the 7th. I don't think so, though. I think we got that till the 14th. So we are paying attention and we are watching that. But yes, right now, we have been basically letting things run. It's given us a pretty good return. Any other questions? Maud, did I answer your questions on what this all means by the underfulfillment of the treasuries? Perfect, thank you. And did I miss anyone? Going back, Jackie, I think I got your comment on Apple. Fuel, Stalin style. Lee Maxwell, me too. On your comment you typed in, I'm just going to say me too. All right, well, hey, if no one else has any questions, I'm going to stop it right here. I'll put the economic reports in. I'll put the earnings in. I'll get our big, not briefing.com, the big picture. I'll get that in there. I just done enough research that I somewhat felt to some of you, I had to justify where my fears were. I have to justify to a certain degree why we're a little cash heavy right now. And I'm having a problem finding more to put us into. And a lot of you didn't understand MRO. So I was trying to do the best I could to explain that one to you. And again, I finally could put a dollar figure on why inflation won't go down. And I mean, it's right there in the U.S. Treasuries. But dang it, I thought I had that one all on my own. Some credit to Bill, that Bill also realized that and heard that through the grapevine and pointed that out. All right, hey, if there are no questions from anyone else, I appreciate you guys being here. I hope this was helpful, seeing you some of the research that we're going through. Perfect. Thank you, guys. I appreciate you being here. If you do have any questions that I'm not answering for you, or that maybe you want to do on more of a personal one-on-one level, Hurley at hurleyinvestments.com. You're always willing to give me a call or to send me an email, the Hurley at hurleyinvestments.com. But I know at the beginning of the year, we were a little slow in getting accounts fully vested. I think some of you have liked your returns in that happening. For some of you that have cash on hand right now, as soon as I have a great opportunity, and I'm researching too, I just ran out of time to go over that with you tonight, but I'll do that with you on Thursday or on next Monday. All right, guys. Hey, have a wonderful evening. Pleasure being with you. Look forward to talking to you next week. Bye-bye, everyone.